Hi, it's Larry Gaines from Options on the Open. We're the leaders in day trading and swing trading using options, and we're on our path to becoming the leaders in weekly options as well. But in this video, I wanted to do a top-down market analysis for all my members and followers. This is a very important technical analysis to do weekly, maybe once or twice a week, or several times a month. But to me, it's very critical as far as getting the top-down market view of the broad markets and all the way down to the short-term time frame. And what I mean by a top-down market analysis is by using 5 different time frames. You use these various time frames to do your market analysis. So you want to look to see what the macro market trend is, and to do this I use the monthly time frame. Now currently we have a trading system, the power cycle trading system, trading model, and this is a price cycle driven model, and we can use this across all assets and all time frames. And so I will apply this on these various time frames just to show me and my members where the market is based on our model. And the macro market trend right now, using the monthly time frame, is currently still down. And I'll go through the charts with you in a minute to show you. Now the long-term market trend, the weekly time frame is used for this, and the current trend is up. And this is using the S&P 500, the SPX is what I use to measure this, because it's one of the broadest ETFs used. And the medium-term market trend, which is a daily time frame, the trend is up. The intermediate market trend, which is an hourly time frame, the trend is up, but starting to get a little toppy. And the short-term trend, which we use a minute time frames and even tick charts, the trend is still up, but also getting toppy. And when I say toppy, that means that it's getting to a point where the trend could shift back down to the downside. So I'm going to go through these charts and show you in detail a little bit more what I'm talking about, and you'll get a better picture of this. And I'm also going to tell you about the January effect and what you should be looking for in January and into February. Okay, first off, right now you're seeing a monthly chart of the SPX cash S&P 500. But first off, I'd like to tell you, what the January effect is. It's quite simple actually when you think about it. At every year, pension funds, retirement funds, they have to reshuffle and rebalance or reweighting of their different asset classes, and they do this once a year, and they usually do it right at the first of the year. It makes sense, right? So this is done in January, where they have to rebalance, reweight their various portfolios. So what this does, usually it has a temporary surge on stock buying and bond selling when they're rebalancing. So they have to either buy more stocks, sell bonds, various things like this to rebalance the different asset classes of their portfolio. And this is a stimulus to equities. Every January, December, January, you see the market run up into these months, and it's ahead of this January effect. Now what happens, you run up in January, and then towards the end of the January, or middle of January to the end of the January, the market, that additional demand in the market dries up, because these funds and these pension funds and retirement funds have stopped their rebalancing. They're done. So once that's done, it's like musical chairs. There's the music stops, and there's no more buying volume coming in. So the markets tend to pull back until they get to a range where you attract additional buying. So that's basically what the January effect is. And in order to show you the effect, I've mapped out a very interesting chart here on the monthly. And I'm going to take a pause here, and then I'll show you exactly what I'm talking about. Now this is, again, is a monthly chart, and what I've done, I've just gone back to 1999. This tends to happen almost every year. I mean, you'll probably find some outlier that it doesn't happen, and there's probably some reason for that, but just to eyeball it, you can get the idea. So here is January 1999. You can see this red bar. These are monthly, so this whole bar here is a monthly. So you can see how it came up. It made a high in January, and then pulled back. That red bar shows you that it ended up closing down. So that's 1999. Here's January 2000. You can see the same thing. You made a high. You know, December was up. You made a high in January, and then it came off, and then it came off real hard in February. So that's 2000. Here's 2001. You can see here Jan, it came up, made a high, and it pulled back at the end of the month, and then February was a very severe down month. So that was 2001. Here's 2002. You can see December was up, Santa Claus rally. Then January, it made new highs, you can see, and then it was down. So that rebalancing came in, it subsided the end of the month, no more buyers, it sold off. So that was 2002. Here's 2003. 2003, even after all this huge move down, you still had this January effect. Here's December and then January right there. So that's 2003. 2004, you can see December rallied up, January rallied up, and then you made highs, and then it came back off. So that particular year it came off and actually sold off real hard in March, but January it did sell off, and February it sold off. See, the bars came down lower. So that was 04. 05, the same. You can see the red bar here went up in December, January's up, started off at highs, came off. Here's 06. You had a rally into December, January, then you can see it made a new high, then came off. Came off in February. February went sideways. 06. Here's 07. Same deal. Came off. You can see it came up, made highs, came off real hard, actually in February. Here's 08. Same deal. 08 cratered. Of course, we all know what happened there. And here's 09. 09, January effect. You see how January came off, was up in December, then came off. Here's 2010, came off. Here's 2011. You can see Dece went up, Jan went up, but then you can see where it closed down. See the bar here, and here we are in 2012. So here's the January monthly bar right here. Now here's the power cycle trading model. Went short right here. This was in July, end of July, and it's still in a downtrend on a macro view. So that's that. Now, one more thing I do want to point out on a monthly chart is that you can see all this length that's up here, and then the market's collapsed. You've got so this says there's a lot of trapped length in here. See, it got up here, then collapsed. So there's still longs here that are trapped. So when you get into this area, this zone, you're going to see more supply. Anything that's left up here, these people are going to get out. So here we go to the next time frame. Here's the weekly. The power cycle trading model went long here in October, right at the low. Beautiful trade there, right here, October 7th, basically, right at that low. Right now, you can see we're up here at this 1308. That's where it closed. Look at this. See this point here? This is where the market broke down. This was the high. It stopped right there at 1308. So 1340 is an area up here where there's going to be major resistance. But you're going to have a lot of resistance here. See, this is that overhead supply I was talking about. There's a lot of trap length that's still there. They're going to, definitely square their books. Now, this is the medium term, so we're going top down, monthly, weekly, daily. This is the medium term. You can see here we broke 1292. This was some major resistance in here. And now you can see that we're back up here, this 1320 area that I pointed out. So we're into this zone here. You're going to see a lot of selling coming in here. Not to say the market can't go higher. The power cycle trading model went long December 21st, and it's still holding long. That's on the medium-term time frame. And here's the intermediate term. Power cycle trading model went long right here on the 13th of January, and it's still holding long. It's getting very toppy though. It's close to turning over to the downside. And the last time frame, which I won't show, but that's the short term, and that was long today, but very toppy. So there's much more detailed information regarding top-down market analysis and all that. But if you'd like to learn more about how we trade and how we use the power cycle trading model, please come join us at optionsontheopen.com. That's optionsontheopen.com, and good luck trading. Also come join us for weekly option trading.